Hello students, this is Ankita, your commerce educator, welcoming you to Global Online where we are taking classes for NET and SET exam preparation. In today's lecture, I am going to discuss 10 most important or most accepted MCQ on income tax unit. As everybody know how much important this topic is from the exam point of view. And because of that, please don't miss this lecture to watch this lecture to clear all your doubt regarding the same. Okay? और ये लेक्चर देखने के बाद आपको ये भी पता चल जाएगा कि किस तरह के क्वेश्चन पूछे जाते हैं इस यूनिट से. ओके? ये लेक्चर देखने के बाद अगर जो आपके कोई डाउट है वो क्लियर हुए या नहीं, ये देखने के लिए हम आपके लिए लेकर आए हैं फ्री इवैल्यूएशन टेस्ट. ये टेस्ट देने के लिए आपको हमारा जो ऐप है ग्लोबल ऑनलाइन वो अपने प्ले स्टोर से डाउनलोड करना पड़ेगा, जहां पर आपको ये लोगो दिखेगा. डाउनलोड करने के बाद आपको उसके स्टोर में जाना है और अपना जो पेपर है यूजीसी नेट कॉमर्स पेपर 2 वो सिलेक्ट करना है. सिलेक्ट करने के बाद उसके कंटेंट में जाना है और कंटेंट में जाने के बाद आपको जो टेस्ट है वो मिल जाएगा. ये जो टेस्ट है वो सभी स्टूडेंट के लिए फ्री है. ओके? और एक इम्पोर्टेंट बात, ग्लोबल ऑनलाइन आपके लिए लेकर आया है कॉमर्स पेपर 2 कोर्स, जहां पर आपको मिलेंगे कंप्लीट वीडियो लेक्चर, मोर देन 100 वीडियो लेक्चर्स वी आर प्रोवाइडिंग यू, नोट्स वो भी डिटेल एक्सप्लेनेशन के साथ, टेस्ट सीरीज विद द डिटेल एक्सप्लेनेशन, प्रीवियस ईयर पीडीएफ विद द डिटेल एक्सप्लेनेशन. द ड्यूरेशन ऑफ द कोर्स इज 1 ईयर और इसकी जो फी है वो इंक्रीज हो गई है और वो अब है 7,000. अगर आप ये कोर्स लेते हैं तो पेपर 1 का जो कोर्स है वो आपको हम फ्री में प्रोवाइड कर रहे हैं. डोंट वेट फॉर द लास्ट मोमेंट, डू जॉइन अवर कोर्स एंड क्लियर योर अपकमिंग एग्जाम. An assessee paid penalty of rupees 40,000 paid for a non-compliance of the provision of Custom Act. Such a expenditure shall consider as. For this, the first option is revenue expenditure. Here the revenue expenditure is an amount that expended immediately, thereby being matched with the revenue of the current accounting period. It is the expenses incurred during the normal course of a business of its day-to-day operation. Second option is capital expenditure. Now what is capital expenditure? It is an expenses incurred on the asset to create the future enduring benefit. For example, a business might buy a new asset like a building, machinery or a equipment, or it might upgrade the existing facility, so their value as a asset increases. Third option is speculative transaction expenditure. Now as per the section 43 clause 5 of the Income Tax Act, speculation transaction is a transaction where the contract for the purchase or the sale of any commodity, including the stock and the share, is a periodically or is the ultimately settled otherwise than by the actual delivery or a transfer of commodity or the scrip. For this section is 43 clause 5. Okay, for the speculation transaction expenditure. And the last one is disallow under section 37 clause 1. Here the section 37 clause 1 of the Income Tax Act provide for the allowance in the respect of any other item of the expenditure not covered by any of the provision contained in section 30 to 36, and it is limited to the amount actually expended during the previous year. The correct answer for this question is option number D, that is disallowed under section 37 clause 1. The next question is, under Income Tax Act 1961, interest on capital received by the partner from the partnership firm is chargeable under the head. For this, the options given are profit and gain of a business or the profession. Second option is income from the other sources. Third option is capital gain, and the last option is none of the above. So here, as per the section 10 clause 2a, please remember the section again, that is 10 clause 2a. Shares of the profit received by the partner from the firm is exempt from the tax in the hands of the partner. This exemption is limited only to the share of a profit and does not apply to the interest on the capital and the remuneration received by the partners for the firm or a LLP. Any interest, salary, bonus, commission or a remuneration by whatever name called due to or received by a partner of a firm from such a firm to be extended under section 40 clause B is a taxable under the profit and gain of a business or a profession. We also call as P, G, B and P. The full form of PGBP is profit and the gain of a business or the profession. The correct answer here for this question will be option number A. Under Income Tax Act 1961, interest on the capital received by the partner from the partnership firm is a chargeable under the head profit and gain of a business or the profession. Method of accounting is not relevant for the computation of income under which of the following head. In this question, they ask you the method of accounting which is not relevant for the computation and the income under which of the given head. For this, the options given are income under head salary. Second option is income under the head house property. Third option is income under the head capital gain. For this, they given you the code and from that code you have to select the correct one. Okay. Here the income chargeable under the head profit and the gain of a business or a profession or the income from the other sources shall be computed in accordance with either a cash or the merchandise system of the accounting regularly employed by the assessee, where the assessee officer is not satisfied about the correctness or a competenceness of the account of the assessee, or where the method of accounting has not been regularly followed by the assessee, or where the income has not been computed in accordance with the income computation and disclosure statement, that is ICDC, means the income computation and disclosure standard as a notified. The assessee officer may make a best judgment assessment as provided in section 144. Please remember the section, that is 144. In income tax unit, the most important thing is to remember is the sections, because you will receive the question on the sections only. The correct answer for this question will be option number D, that is all of the above. Income under the head salary, income under head house property and income under head capital gain. In which of the following cases the interest-free loan is not treated as a perquisite? In this question they ask you given which case the interest-free loan is not treated as a perquisite. Now what is the meaning of perquisite? The perquisite may be defined as any casual or a benefit attached to the office or a position in addition to the salary or the wages. This perquisite is defined under section 17 clause 2. Please remember the perquisite is defined under the section 17 clause 2 of a Income Tax Act as including clause I, the value of a rent-free concession, rent accommodation provided by the employer. For this, the first option is if the amount of a loan is less than or equal to rupees 20,000. Second is if the loan is given for the medical treatment of a prescribed diseases. Third is both A and B, and last is none of the above. Here the perquisite allowed outside India by the government to the citizen of India for rendering the services outside India, that is under section 10 clause 7. Rent-free official residence provided to a judge to a high court or a supreme court for a official of the parliament, union minister or a leader of a opposition in the parliament. No perquisite shall arise if the interest-free concession and loan are made available for a medical treatment of a specific diseases. Rule 3A, where the loan is a petty not existing in the aggregate rupees 20,000. No perquisite shall be arises in relation to the expenses on the telephone, including the mobile phone, incurred on behalf of the employee of the employer. The answer here for this question will be option number C, that is both A and B. When a person reduces a total income by making a false claim, it is the process of. Here they are asking you if a person or a assessee is reducing his total income by making a false claim. It is a process of. For this, the options given are tax avoidance. Here the tax avoidance means taking a undue advantage of drafting the mistake for reducing the tax liability and thus avoiding the payment of a tax which is a lawfully payable. Second option is tax evasion. It is an illegal activity in which a person or an entity deliberately avoid paying a through tax liability. Those catch evading a taxes are generally subject to the criminal charges and substantial penalties. Third option is tax planning. Now what is a tax planning? Tax planning means reducing the tax liability by taking the advantage of legitimate concession and exemption provided in the tax law. And the third one and the last one is tax management. Here the tax management means planning affair in such a manner so that the tax obligation is managed properly. The objective of a tax management is to comply with the provision of the income tax law and allied rule. Tax management help in avoiding the payment of interest, penalty and precautions. Okay. The correct answer for this question will be option number B. When a person reduces the total income by making a false claim, it is a process of tax evasion. Return on income is submitted under which of the following section? Okay. So here they are asking you when the person or a assessee is making the return on the income, under which section he is submitting that. For this, the options given are section 138. Section 138 of Income Tax Act 1961 is deal with the mechanism for disclosure of the information in respect of the assessee under the Act. Subsection clause 1 of this section provide the CBDT or a income tax authority specified by it may furnish such a information as obtained in the performance of their function to the authority either dealing with the law related to any tax, duty, cess or a foreign exchange or the authority. Second option given is section 139 clause 1. So here the key subsection of section 139 are section 139 clause 1 is a mandatory or voluntary for the returns. Section 139(3) is for filing the income tax in case of a loss. Section 139 clause 4 late income of return. Section 139 clause 5 is for the reverse return. Okay. And the third option is section 142. Here the section 142 clause 1 of Income Tax Act 1961 is for the empower income tax authority to issue the notice for making the assessment where the return has been filed, or if the return has not been filed, then to furnish the required information in the prescribed manner. And the last option is none. The answer for this question is option number B, that is section 139 clause 1. And the Indian citizen is living in India during the previous year for taking an employment in England. For how many days at least he must stay in India during the previous year in order to be a resident? If suppose I am living in India for any purpose, okay, and to get the resident status in India, how many days I have to stay in India? For this, the options given are 192 days, second is 90 days, third is 180 days, and the last is 150 days. And the individual is said to be a resident in the tax year if he or she is physically present in India for the period of 182 days or more in the tax year. 182 days is a rule, or a physical present in India for the period of 60 days or more during a relevant tax year, and 165 days or more aggregate in the 4 preceding year. In the event of an individual who is a citizen of India or a person the Indian origin leave the India for the employment during and the financial year, he will be qualified as a resident of India only if he stay in India for the 182 days or more. So to get a resident status in India, the person have to stay in India for at least 182 days during the previous year. The next question here is, an individual has lost his both the leg permanently. He is entitled to deduction under section. For this the section given are ATG. ATG of income tax provide an income tax deduction to the taxpayer on the donation made to the charitable institution and a specified trust certain fund. This deduction is available to all type of the person. Second option is ATD. An individual or a HUF can claim the deduction under section ATD for the a medical insurance premium paid for a self-spouse, children or a dependent parent in any mode other than the cash. Third option is ATU. Section ATU provides a tax deduction for an Indian resident who have a 40% disability. Please remember the 40% disability. Okay, as specified by the law. There are different criteria and this is the specified set of the procedure for claiming this deduction under section ATU. The taxpayer which have a less than the 80% disability get a deduction of 75,000. Okay, less than 80% disability. Okay, that person will get the 75,000 of claim. Okay, please remember. And the taxpayer which serve the disability which is 80% or more then get the deduction of 1,25,000. Please remember again 1,25,000 if the person is having a disability more than how much percent? That is more than 80%. Okay. The deduction is a fixed amount which is allowed as a deduction from the taxable income. And the last option is ATCCC. Section ATCCC provides a tax deduction on buying a new policy or continuing a policy which pay the pension with a deduction going to rupees 1 lakh per year. Okay. How much is the 1 lakh under ATCCC? On any expenses incurred in buying or maintaining the policy. The answer here for this question is option number C. An individual have a loss his both the leg permanently. He is entitled to deduction under section ATU. Which of the following amount is not allowed for the deduction from the income from the house property? In this question they ask you given which is the amount which is not allowed for the deduction from the income from the house property. Now what is the income from the house property? That you have to understand first, because the first and the most important step while answering any question is to understand the question properly. Then only you will be able to answer the question. So the annual value of any property comprising a building or a land, apartment thereto, of which assessee is the owner, is chargeable to the tax under the head income from the house property. For this the first option is interest on a loan borrowed for the construction of the house property. Second one is interest on the fresh loan taken to the repay original loan. Third option is interest on unpaid interest. And the last option is interest on unpaid purchase price. Section 24B, please remember the section, that is 24B of the Income Tax Act allows the deduction of the interest on the home loan from the taxable income. Such a deduction is allowed on the accrual basis, not on the paid basis. Interest include a service fee, brokerage, commission, prepayment charges. Interest or a penalty on unpaid interest shall not be allowed as a deduction. That means the correct answer for this question will be option number C. That is, interest on unpaid interest is not allowed for the deduction from the income from the house property. So during my previous lecture, I asked you one question, and the question was, what are the exemption limit in a hostel expenditure allowance? For this, the options given were 200 per month, 300 per month, 400 per month and 500 per month. Any allowance granted to an employee to meet the hostel expenditure of his child will be completely exempted from the income tax up to the 300 per month. Okay. Up to the maximum 2 child. Okay. If the person is having a 4 child, then he will not get the tax benefit for the all the 4 child, but only for the 2 child. Okay. The answer for this question will be option number B. Okay, here is the last question for today's lecture, which you have to answer. The question is GST is, and the options given are central tax, federal tax, state tax and local tax. Please write your answer in the comment box. I am waiting for your answer. Till then, keep watching, keep learning.